You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back once again, holding court on yet another Education Wednesday. Yes, that means it is time for your premier options educational program. Yes, it is time for Options Boot Camp. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are binging these days. A couple of things to remind you of at the top of the show. First off, if you do like what you hear, make sure you throw some stars, a likes, a rating our way. It does help new people continue to discover the content, just like this week's 5-star review coming from Zeit, maybe just Z-E-I-T, however you pronounce that. They say 5 stars are quite fun and educational. Have you thought about translating this show to other languages? I think this show would be popular in other countries without knowledge of options. Well, thank you. And everyone else who takes the time to rate and review out there, listeners. And we have thought about that in the past. We have not gone down that road for a lot of reasons, not the least of which being it is no small effort to translate all these shows into all the myriad of languages people would want around the globe. So we leave it in the mother tongue, the lingua franca of finance right now, which is, of course, English. And, you know, it doesn't seem to slow down the adoption around the globe. In fact, my black-hatted one himself is just back from globe hopping and hanging out with some of our listeners around the globe. Yes, I am talking about the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, freshly back from Oktoberfest, where he was hanging out with some of our listeners across the pond. So they can get it even in other areas where English is not the first language. Mr. P, welcome back to the show. How are things in the land of MTM? And what are your thoughts from our listener, Zeit, who thinks we should translate the show? We got listeners abroad even without translating it, sir. Imagine if we translated it, turned it up to 11.
Hey, well, parliamo l'italiano, non è vero?
I think you and I could probably handle the Italian. My Sprechen Sie Deutsch, not exactly up to snuff, I don't think.
Yeah.
Might have a hard time there. You have to go, hey, maybe your buddy there could be our local German translator. What do you think?
Yeah, okay. We got one language, three languages.
Two languages down, yeah. It can argue whether we've grasped fully English, but that's a conversation for another day. So, yes, 3 languages there. There we go. We got 3. So who is this? Zait, Z-E-I-T. Not a bad idea. Maybe we'll run with it out there. But, it is time to run with Dan a little bit of the old options drills.
Colin Boots. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. We may even have someone speak to how such strategies can be employed using the new platform. Do you hear me? Yes, sir!
Ah, yes, options drills. This show, always so fun to do when we start getting into the months where things get colder and chillier, because it's always reminiscent of Flag Day and just July 4th and all sorts of fun. Summer, warm weather holidays. Yes, welcome to Options Drills, a portion of the show where we break down some options concept or technique and explore its use in a little bit more detail, how we utilize it in the markets, maybe some caveats, things you should be aware of when you're thinking about utilizing these techniques. Before we get into the drills really quick, I got so excited, got so distracted by Zeit's question out there about translating. I forgot to mention, of course, if you're just listening to Boot Camp, by all means, upgrade wherever you're listening to this to the full network. A lot of great educational content coming at you. Of course, the entire run of Options Playbook Radio. Is it coming back? I don't know. Maybe. We shall see. We're working on it. And then, of course, all the educational segments on shows like the Option Block, including Uncle Mike's Strategy Block segment. That's been running for over a decade there as well. A lot of great educational content for you. Then, of course, if you want even more educational and just great quality options content, and you maybe want to take the reins, ask some of your own questions, some of the best minds of the world of options and derivatives, only one place to go, theoptionsinsider.com/pro. Once you're there, of course, click that join button, unleash the flood of content that's coming at you. All sorts of fun over there. Only one place to find it, theoptionsinsider.com/pro is the place to go to learn more. As we learn more about what Dan and I are drilling on today. And, Dan, today's topic is a controversial one. This is one of those topics where you put it out to 10 different options pros, and they will probably give you a wide range of answers on where they fall on this topic. So let me start with you. Let me get your pulse, Dan, then we'll get out to some of the listeners, and we'll get into all this good stuff. But today's topic, again, a controversial one. It really boils down to, how cheap is too cheap when it comes to stocks. When you say, you know what, forget about it. It's not even worth trading the options. So when I say to you, Dan, what are your thoughts? Are you a fan? Are you not a fan of trading options on cheap stocks? What do you say, sir?
I say if there's an opportunity there, I will trade it. And it doesn't matter what the stock price is. Now, that said, for certain strategies, I do have guidelines for myself and, our fellow student traders over here at Market Taker, like our earnings time spread. Well, my general answer is, because I think we're going to get deeper into this, my general answer is no, I'm not completely averse to it.
So Dan says if a stock's trading 38 cents and that front month call right before earnings is 23 cents, he's buying it, baby. He wants it. He wants all that action. Value be damned, says Dan. All right, let's see what our audience is saying, because we thought, Dan, this might be a fun one to put out to the audience, kind of a bit of a flash poll to go along with the show. So it's not going to be a full question of the week. You don't have all week to vote on this one. So if you're listening on demand, we were nice to you. If you're listening after the fact, not in the live, then you still can participate. It will be live for about a day over there. @options is the place to go on Twitter. Another good reason why you should be following us throughout the week, listeners. A lot of just an explosion of content coming at you there throughout the week, including today's flash poll. Quite simply, when is a stock too cheap to bother with trading the options? So what is your cutoff level is what we're asking you out there. Gave you 4 choices. Well, we're really 3 in the infamous other. We said there's no cutoff, so you're like Dan. You'll buy the call for 30 cents when the stock's 38 cents. You don't care. Or B, what a common line of demarcation for a lot of people is, which is below $10. Or C, you go a little bit lower, you go $5, or you're going to go for the infamous other, in which case we just ask you, what is that cutoff? Is it $1? Is it $3.50? Whatever your line of demarcation is, send it in to us. All right, Mr. Dan, let's go out to the audience, see what they have to say, because Dan's already in the there is no cutoff level. I'm curious, Dan, where do you think our audience is lining up right now? This just went live right before showtime. So in the early voting, what do you think is winning? There is no cutoff, below $10, below $5, or the infamous other?
I'm going to say that they say below $10. I think we're going to get the most action there. That's what I'm guessing.
And once again, sir, you have your finger on the pulse of our audience. 44.4% saying their cutoff is below $10, which is a pretty high cutoff. That means you're missing out on a lot of names. You know, Ford was below $10 for a long time, so there's no action there. In fact, when I asked this a while ago to our buddy, Mr. Overby, used to be on OPR. Is he coming back? We'll see. His answer, Dan, was wherever Ford is trading. That's where my cutoff is. I thought that was a pretty good answer as well. So if Ford is $12, he's not trading anything below $12. But there you go, listeners. Below $10. A good chunk of you right now. 44.4% saying below $10. Third, 33.3% saying below $5. And then we got nice round numbers today in the early voting, at least. 22.2% saying there is no cutoff. Right now, no votes for other. But again, the poll is young. Just went live. Got about a day left on this one. At options is the place to go. So below $10 right now is where a lot of you are coming home to roost, which again makes sense. That's a very clear line. You know, for myself, I tend to fall in the Dan camp. I won't say I have no cutoff. I will say I start looking twice at things below $10, but I have been known to, and I still will trade options on stocks below $10. Just listen to our Options Oddities show. We get into trouble in that range all the time. I can think off the top of my head, you know, Palantir, Robinhood, EDU, Oatly, infamously, all names that have been below $10 where we were trading options on. So we do get into trouble out there in the past, but you usually take a second look at that level. For me, when it gets below $5, that's where I really start questioning things. And I say, well, if I'm going to do, especially a long premium type play, am I better served using the stock at this point? Do I really want to mess around with paying a substantial portion of the value of the remaining stock for a short duration play in this name? So that's where I really start questioning things below $5. Not to say we haven't done it. Again, EDU comes to mind as one of the more infamous ones we were joking about on Options Oddities. We think the stock was around $3 and the 2.5 puts were trading for 50 odd cents with less than a month ago. And we thought, how low can this thing go? I think it was trading more like $5 or $6 at the time. And so with paying that much for the 2.5 put, and we found out very quickly it was underpriced, that put. So we had a lot of fun trading out of it. We ended up making money on that trade, but it was a fun one. If you're not listening to the pro and not checking out Options Oddities, go check that out. It's a fun saga for maybe a little bit of hubris with selling puts, and then also a fun way to trade out of them and make some money back on a trade that seemed very high probability. And again, at the end of the day, sometimes when vol is high for a reason on these puts, and we all discovered that collectively together. It was a fun time for all over there. So yeah, check that out. At Options is the place to go to vote in the poll, listeners. But right now, you know, this whole thing, in fact, if I go and bring on our buddy, the Viceroy, Mr. Alex Jacobson right now, he will just say flat out, you know, if it's below $5, even below $10, he's out. He wants nothing to do with it. So that's why I say this is a very contentious thing. People who've been around the business for a long time have a lot of different views on this subject. So let's start with some of the obvious things you have to be aware of when you're trading options on a cheap stock. The one I just joked about. The stock is, let's say it's around $5, and now you have options trading around 50 cents going out maybe a few months. You're paying around 10% of the value for the stock if you're going to be buying these. And a lot of times with these cheap names, you're going to be paying more than 10% of the value, 15, 20 plus, 30 plus percent of the remaining value of that stock for a very short duration swing at the bat. So you have to come to grips in your mind with, are you comfortable with doing that? We always say all the time, if you're looking to hedge SPY with 5+% out of the money puts, and you do it on a regular basis every few months and you roll it throughout the year, in a normal environment, you're going to pay somewhere around 8 to 10% of the value of SPY over the course of that year for that protection. And we always say that's a pretty hefty cost. Are you willing to do that? Now you're going to have to be willing to do that, and much more probably from a percentage terms, for a very short swing at the bat, whichever way you're going, upside, downside, in a particular cheap name. So that's the first thing you have to come to grips with. Is it worth it? At the end of the day, you could put those funds to work in the underlying and get at least the expiration date off the table. So something to bear in mind. Dan, is that something you wrestle with all the time when you're looking at the value of an option versus the remaining value of the stock, and you say, well, this thing's actually 28% of the value of the stock. I don't know if I could outlay that for this. Is that something you wrestle with over there at MTM, sir?
Yeah, I mean, if we're talking about just buying options outright, it ends up being pretty tough, I think, trading some of these cheap options. Just simply looking at a chart and trying to play a momentum or breakout move, it's going to be one of two things. Like you're pointing out, it could be a very, the call could be a big percentage of the stock price, and it's like, that's crazy. Or it could be just so small, and the strike selection puts it so far out of the money that it's like a ridiculous lottery ticket that doesn't make any sense, So, and I think we'll get to this by the end of our talk here. For me, I'm willing to trade some of these very, very inexpensive options, really just under certain circumstances. I mean, mainly the main only time I trade those is if it's like some of our options rater, short squeeze plays, because those are the stocks where they're just really beaten down and they have a low float, and there's a lot of people watching it, and there's a lot of people with varying opinions on it. And like most of my short squeeze candidates end up being under $10, and they tend to be the better ones. So outside of short squeeze candidates, yeah, I barely ever do it. Like our earnings trades, I give the guidance, if it's under $25, don't even do it. Covered calls are so tough on stocks under $20. The straddles end up being pretty much a nightmare when stocks are under $20 because they have to move such a huge percent, because the option prices end up being a little bit more expensive, but still not expensive enough to sell.
Yeah, a lot to unpack there. Dan hit on one of the caveats there you have to really pay attention to when stocks start getting cheap, especially around the $5 and below levels. First off, some of these strategies you may like to employ on a regular basis in stocks that are a little bit loftier, like the covered call. I know for a lot of you, the covered call is kind of your bread and butter. And when these stocks start getting down to these levels, just the basic options math at the end of the day doesn't generate a lot of value for these options. So unless you're okay selling a covered call for a nickel or a dime on a stock, you're really not getting a lot of bang for your buck. And at that point, if you're selling these covered calls, you might say to yourself, why am I even bothering holding on to the stock at this point if I'm willing to give up all the upside for a nickel? So it's definitely something to bear in mind when you start getting down to these lower levels. Your options, pun intended, are going to be limited in terms of what you can really do out there from a practical perspective. You can go farther out the chain, of course. You could surrender all of your upside for the next, let's say, year, and maybe now you're getting a whopping 30 cents. Ooh, fantastic. But then again, you have to ask yourself, why am I even holding on to this underlying if I'm willing to surrender all of that upside for a substantial period of time for a somewhat nominal amount of premium? But again, these are the trade-offs you have to make when you're trading cheap options. So the first thing to pay attention to is, of course, a lot of your go-to strategies may not be applicable anymore. So you may have to change your game a little bit, and you may not be comfortable with that. B, options, like we said, are limited, pun intended, below the $5 strike, certainly, and even starts happening below $10. Now, if you're out there trading your Apples and your Teslas and all the other names that are lighting up our tape all the time, you're used to having just an embarrassment of riches when it comes to strikes and indeed to expirations. You could trade every dollar, liquidity for days on all these strikes, dogs and cats living together. It's just a good time for everybody out there. Now you get to some of these names, they start shriveling up. They get down to sub 10, certainly around the $5 and below level. Guess what happens? All those strikes go away, and you don't really have usually even the $1 strikes anymore. You might have $5 and then maybe 2.5, and that's it. Basically, you're talking about, well, am I looking at the stock's at $4.95? Do I want to sell the 2.5 put or do nothing? If you're looking at put selling kind of thing. Or if I'm looking to hedge, is that where I want to hedge? So again, it limits you dramatically in terms of the types of strategies you can employ because the strikes just simply aren't there anymore. So if you're used to selling pretty tight, close to the money puts and collecting some premium that way, or looking to hedge or buy upside, whatever it is you're looking to do and having a lot of different strikes to do it with, not going to be the case once you start getting into these cheaper names out there. So bear that in mind. First warning, most of the strategies you may typically employ, maybe not going to work or not going to work as well in this environment. B, you're not going to have as many strikes to employ them on. So that also is going to limit you from an overall just options utility perspective. You can't do as much as you may want to do or be used to doing out there. And then, of course, the other follow-on in this, once the stock starts getting lower, as we said, this is a contentious issue. The cheaper the stock gets, the more people are going to want to just go to the stock as opposed to the options. So the argument for the use case for trading the options gets lower the lower the stock gets. So there's a high correlation there. So as you start dropping in the stock price, you're going to see the options volume take a commensurate hit as well. Especially once you get around that $5 and below level, you're going to see a drop-off in liquidity on a lot of these strikes you're looking at. So again, you're going to have fewer strikes. You're not going to have as much liquidity going up in the name on a day-to-day basis. You're going to start looking at these Roach Motel scenarios where you could get in, but it's going to be kind of hard to get out. And if you do, you're going to have to pay a pretty aggressive spread to do so. So something to bear in mind when you're looking at trading options on these very, very cheap names. Liquidity is going to be an issue. Strike selection is definitely going to be an issue. And also the utility or even availability of some of your more common strategies, your covered calls, as Dan mentioned, certainly your straddles and all sorts of other strategies. You're going to have a very limited tool set once you start getting down to the $5 and below range, certainly. Something else to keep in mind when you're looking at the trading options on these very cheap names. So, Dan, we talked about liquidity. We talked about the dearth of strike selection on these very cheap names. And we also talked about the fact that a lot of the strategies you may have in your arsenal, your go-tos, not going to work as well, if at all, in these very cheap environments. So you might find yourself adrift, not being able to do what you normally want to do. So in addition to those three things, anything else you want to add for our listeners in terms of caveats or takeaways or warnings when they're looking at potentially trading options on very cheap stocks?
Yeah, there's one more that I thought of that wasn't on your list. And then actually, now that I think about it, I've got another thought, if I can keep them both straight in my head here. One thing is the percentage of the option premium that commissions eats up, right? And that could be the case for buying options or selling options. Like AT&T is a stock that I used to sell calls on, and I was actually able to get one off on a pop just last week, I want to say, but it's few and far between. It's really hard to find them. I keep looking because all the things that you and I are talking about here, Mark, I think are excellent rules of thumb, but every once in a while there's a weird anomaly where it's oh, wow, this actually works, So I guess that's one of the reasons why I'm open-minded to looking at them. But, like AT&T, here, I'm going to pull it up on my screen right now. Hold on a second. So AT&T, I could go and sell a 23-day 15.5 call, which is way too close to the money for 21 cents. So $21 of money. Not really worth it. And the commission that I have to pay on that, with my Thinkorswim account, I have reasonably good commissions. With another account that I trade, they're somewhat higher. But let's just take the person who's paying $1 a contract, okay, which is probably higher than a lot of people are. But let's just say you're paying $1 a contract. You're paying 5% to sell that call. You're already giving up 5% of the profits. And then, hopefully you're able to buy it back at pennies, and hopefully you have a broker that doesn't make you pay commission to buy back options for pennies. But like, what if it goes up and you've got to roll it on expiration day and buy it back for 25 cents? Well, boom, now you're paying another 5%. Like, you lost 10% of the trade in commissions. So yeah, commissions is one of them. And well, I guess the other thought was that these are rules of thumb that probably hold true 95% of the time. But every once in a while, there might be a trade there on one of these low-priced stocks.
So hit us up. Let us know, listeners, what are your thoughts on when and if you're comfortable even trading options on cheap stocks? Let's do another quick check-in again. If you're listening on demand, I know a lot of you listen in the early blush, but a lot of you come back weeks, months, and many years after these episodes first air. So if you're doing that, head on over to @options. There'll be something else there waiting for you. I don't know what the poll will be many years from now, but there'll be something there for you. But right now, we're still hanging out around the same levels as we were earlier in the show, a little bit north of 40% for below $10, around a third for below $5, and close to a quarter for there is no cutoff. You're in the Dan camp. You're willing to do it all out there. But I'm curious, that'll be live for about the next day. So quick one on this one. So get over there @options, make your voice heard, and we'll reveal the final results on next week's show. Speaking of your thoughts, listeners, let's get to them now. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's get to it. Your thoughts, your questions, your queries, and also let's stop burying the lead. It's what everybody's here for. The hotly anticipated, much debated market taker question of the week.
All right, so this is one I get asked all the time. What is the best way to learn options?
You sure it's not how do you deal with working with such a handsome fellow on a weekly basis? I'm sure you get that one a lot.
I've actually never been asked that question, Mark, now that I think about it. But I'll keep an ear out for it. If anybody ever asks me that, you'll be the first to know.
A man who just drips sex appeal at every moment, sir. How do you handle it?
Yeah. No, never been asked that, strangely. Okay, so what is the best way to learn options? And first of all, one of the best ways is you're already doing it. You're listening to this podcast, the other podcast that Mark has on this station, and there's other podcasts out there too. Like, you are taking the first step and taking the bull by the horns of your financial freedom, man. So first of all, good job. But the other thing is that people learn in different ways. And I think it's important to figure that out for yourself. Like, how does my brain work? And do you learn best by reading a book? Do you learn best by, watching really short videos because you have a short attention span, like, me, and a lot of traders, I think. Do you learn best with like a mentorship, not in person? Well, yeah, maybe in person training, or just having a one-on-one coach, a one-on-one environment, which is a luxury for some, but it's probably the best way for a lot of people. And I guess I'll just mention this real quick. If anyone is interested in learning more about one-on-one coaching with Market Taker, sorry, I'm giving myself a commercial here, but I just thought of it. You can actually go to our website, markettaker.com, and just scroll down to the footer and click one-on-one coaching. And we would have one of our Trader Success Team members give you a no-pressure call and just talk about if it's a good fit for you.
I think there is something to that, though. People learn different ways with different media. We were talking a while ago about our reading list, our book club. We need to put that up on the website. People have asked us in the past, where's your book club recommendation list? We have to go write that up for the folks out there. But you're right, it does, depending on how people like to learn. This is, of course, that's the reason we've been on this format since time immemorial here, since the early days of podcasting, listeners, we found this to be a great way to engage with people. They can do it on their own schedule, wherever they are. They don't need to sit there and watch us. So they could drive, they could work out, they could do whatever else it is that they are doing and still put their attention on us. So it's a great medium for that. But maybe you have different ways you like to learn. I'm curious, listeners. I'm also curious about your thoughts on our actual question of the week. Remember, the one we were just talking about earlier, that's kind of a bit of a flash poll just to go around this show. Our actual question of the week for the full network, for all of our audience out there, is going back to another hotly debated issue out there right now. It's about all things zero day. We say we've got more data under our belts now about zero DTE options, so it's time to revisit this question. Quite simply, do zero DTE options increase intraday volatility? Heck yes, heck no. Or do you still need more data? Mr. Dan, I'll arm you with a little bit of data for yourself. We asked this question back in February, and close to 61% of our audience said yes. They thought they did add more volatility intraday. We obviously have more data under our belts now. I'm curious for you, Mr. Dan, where do you fall, and then where do you think our audience is falling?
Well, I'll tell you, my gut instinct on it has been no, it doesn't. But the one thing that I've learned from being in the trading business for 30 years, among other things, and some of my readings, is that we don't make decisions on gut feeling. We do it based on data. So as I was listening to the question, I pulled up a 10-year chart of SPY, and I'm looking at the historical volatility. Now, the zero DTE thing is not the only criterion that becomes a factor in whether or not historical volatility is picked up. But starting in the beginning of 2020, February or so of 2020, implied volatility has been above the whole previous 6 years before that, or whatever it was, 7 years before that, that entire time. So, and I like I said, I can't pinpoint exactly when the zero DT thing really happened. I mean, it started with
kicked off in like April of last year is when it really kind of started going in full force. So we have like a little over a year, about a year and a half worth of real everyday weekly expirations now.
Yeah, and but I mean, it was a slower process because we got the 3-day a week ones a little bit before that, Yes, we were close to it for a while. They just kind of filled in the gaps, the Tuesdays and Thursdays back last April, I believe. So I mean, I don't know. There might be a case for that. I think I would be in the I still need more data camp.
Yeah, I know this was a big subject of debate down at the Risk Management Conference this past week over there in Austin, and I think the jury there came down on yes. There are some arguments for no, that maybe market makers put them in separate buckets and so allows them to maybe hedge a little bit more dynamically intraday than they would otherwise. Some people have said people use them now as alternatives to things like futures for intraday scalping and things, so maybe there's some mitigating effect there. But in general, I think the lion's share people still say yes. Again, you're right. We do need to go look at kind of intraday vol, specifically starting last April, and see how that has been impacted. Obviously, there have been other factors going on than zero DTE. But in these big index names in particular, that's where things really started kicking off out there. So intriguing thing right now, Dan, our audience is falling down in a very similar pattern to what they did back in February. Heck yes, saying 63.3%. Heck no, 31.8%. And the I still need more data camp, 4.5%, Mr. Dan. So yeah, looking very similar to last time. I like this comment from one of our pro members, Age of Delaquarius. He just said, "Does gasoline cause a fire to spread?" I like that. He's well known in our pro circles for being, shall we say, not exactly a huge fan of all things zero day. So intriguing stuff out there. Let's keep rolling some of your other questions and comments. We got a comment here from SP2. SP2 just says, I'm not sure where all the confusion stems from trading cash-settled options. I've been trading them for years and haven't had any problems. I love the fact that my account is just debited or credited at the end of the trade. No messing with stocks or anything like that. Maybe your listener needs to switch to a better broker that surfaces the settlement process better. Yeah, this was our topic from our most recent episode, listeners, where we had a listener write in with some confusion about cash settled versus the physically settled options. We went into that process again on the show recently. So if you missed it, go back and check it out, listeners. And, SP2, I'm with you. Traditionally, cash settled options are the simpler option, pun intended. That's why people tend to gravitate towards them. There's not as many moving parts. You don't have to deal with the nuances of getting the underlying put to you and having the capital for it, or vice versa if you're short the option. So a lot of things going on. There are a lot of moving parts on the physically settled options you don't have to deal with on the cash settled. So you're right. There are fewer moving parts. I think it just came down to, at the end of the day, I believe they said their broker was Toss, the way the broker was surfacing that to them. And that kind of surprised me. I need to go back and dig into my Toss and see if I have any cash settled positions that are going out soon, so I could see that for myself, exactly how they surface that data, because Toss is usually pretty good about that kind of thing and having some sort of summation tab so you could see the entire position in there and you could just see the net debit or credit, which at the end of the day is what you're really focused on. All the other things in between are just confusing data points. You wanted to see what you did net debit or credit on the trade. So they usually make that pretty easy. They usually surface that pretty well. So if they're not doing that, maybe that's an issue. And again, maybe if that's something that's confusing you, maybe SP2 has a point. Maybe you do need to change brokers. Dan, what are your thoughts here on SP2 and others who've shared similar sentiments that they like cash settle because it's the simpler option and they're not sure where the confusion is stemming?
Yeah, I'm not sure where the confusion is stemming either. But, if I'm not mistaken, earlier this morning, there was an email from the SIBO that was talking about, wait, so index options are cash settled, like in quotes with a question mark at the end. So I don't know what the context is, like why this is becoming a big question. Because, it's been like this for 30 years or something. It shouldn't be a surprise. And if it is a surprise, you shouldn't be trading. You need to do your homework. You should really understand the product that you're trading before trading it. You're not allowed to get caught off guard by something like this. That's what I would be telling my student traders.
Yeah, fascinating stuff out there. That music means we have come to the end. You're right, SIBO having some difficulties today out there. It looks like some outages out there as well. So it's a challenging day for a lot of options traders out there trying to close your positions. Hopefully you're faring well out there. And again, let's just check in really quickly before we get out of here. And looks like we're still at, below $10 actually getting a little bit more love. 46.2% right now saying below $10 is your cutoff for cheap options. 30.8% saying below $5, and 23.1% for there is no cutoff. Get over there if you're listening on demand in the next 24 hours and make your voice heard at options. And again, we'll reveal the final results. A very debatable topic. Some folks are going to come in on all different levels. Some folks below $10, that's it, I'm out. The stock is an option to them at that point. So, kind of to each their own on this, but it is an important topic, especially for a lot of you newcomers to the world of options who maybe don't have a lot of capital in their accounts, so they're going to gravitate towards the cheaper stuff anyway. So just some caveats to be aware of as you're diving into that space. But Dan, if folks have questions about zero-day or about cheap options trading or anything else, where should they go? What should they do?
Yep, we're glad to help. Just make your way on over to markettaker.com, 2 T's in a row, and glad to help. We'll field your questions.
Market Taker, don't forget the second T for Theta. Hit them up over there, markettaker.com, the place to go. Of course, if you want to get access to all the great pro stuff we've been doing over there, theoptionsinsider.com/pro. The place to get access to all of those goodies over there, the Pro Podcast feed, the live streams, the giveaways, the exclusive content, everything else we've got cooking over there in the land of the pro. It's a fun time with some cool people. I think you're going to like it. That's going to do it for us on the network today. Back again tomorrow with our double dose, starting off with, of course, the option block. We'll be joined by our buddy, the Flow Master, again, giving us some updates on all things going down in the world of options trading. So if you're on the more active trading side, you'd like to see some activity, analyze some flow, talk some unusual activity, you should be checking out the option block. And then after that, for all you futures options traders, and there are more of you all the time, it is impressive to see how many people are flocking into that show. Then check out This Week in Futures Options. We do one with SIBO, we do one with CME, so a lot of different data coming at us from a lot of different marketplaces out there. That's a fun time. Friday, of course, volatility views, so if you're one of the many who've been asking us questions after our vol show a couple of months ago about things like VIX or VXX or UVXY or UVIX or all that fun stuff, that is the show for you. And then, of course, after that, for our pro folks, we come back at 3 p.m. for a little bit of the old options oddities fun, where we break down all the world and all the week of unusual activity. We get into all sorts of trading fun out there as well. So a fun one to check out there. Then we're back again next week, all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.